Welcome everyone. We're going to be going through a lot of material today. The name of the webinar is Stimulus Bill Updates PPP, ERC, and Beyond. And we are going to have an acronym-filled webinar today. If there isn't one thing that accountants love, acronyms would definitely be kind of at the top of the list. So we've got a lot of things to cover. This webinar will be a little bit higher level than some of the ones we've done in the past, since we're covering quite a bit of material, but we hope to maybe do some smaller, more focused webinars going forward. So keep an eye out for those. But hopefully today you'll get some good information on some of the programs and the updates that have been made to them in recent weeks. It's been a busy few months, a lot of new legislation, a lot of new guidance. So hopefully today you'll get a little bit more information to help ease the stress of dealing with some of these programs. So today's topics, like I said, we're going to be covering quite a few different areas. These might not apply to all of our attendees today, but hopefully it'll give you enough information to be able to do a little bit more research or ask a few additional questions to help make sure that you have all the information you need. So like I said, it's acronym central. So we'll be talking about PPP updates, the Paycheck Protection Program. We'll be talking about the Employee Retention Credit updates, or ERC, both for 2020 and 2021. There are also some Families First Coronavirus Response Act, or Ffcra extensions. The Targeted Economic Injury Disaster Loan, or EIDL program, has some new information. We'll be talking through the Shuttered Venue Operator Grant information, also known as SVOG. And then brand new is the Restaurant Revitalization Fund, or RRF. So we'll go into what details are currently available for that program. So like I said, a lot to cover. Hopefully we'll have some time at the end for any questions that come up. But again, this will be fairly high level, and hopefully we'll have some shorter webinars in the future to go into some more detail on some of these items. So what we're really talking about today are things that were extended or updated or added per the American Rescue Plan Act of 2021. This is the third stimulus package in a year. It was a $1.9 trillion stimulus package that was signed into law back on March 11th, so about 2 weeks ago. It's got a lot of updates in there. There's a lot of individual tax credits information. So this webinar is strictly discussing those programs for businesses. So the parts of the stimulus package that were included in the American Rescue Plan Act included $28.6 billion to the Restaurant Revitalization Fund, which again is a brand new program, hasn't been available in any of the previous stimulus packages. It also added an additional $1.25 billion to the Shuttered Venue Operator Grant Program. There was already $15 billion allocated from the Economic Aid Act, which was the bill signed into law back in December. We got an additional $15 billion for the Targeted EIDL Advance Program. We have an additional $7 billion allocated to PPP. The act also extends the Employee Retention Credit through the end of this year. Originally, it was slated to end June 30th of this year, so we have 2 more quarters that are eligible. And then it also extends and expands the Ffcra program through September 30th of this year. I believe it was originally set to expire either the end of March or April, so it extends it through 3rd quarter of this year. There's also some expanded eligibility with Ffcra, which we'll talk about a bit. So a lot of things happening. It's crazy to think that in a year's time, it will be almost exactly a year. The CARES Act was signed into law on March 27th of last year. Crazy to think that a year has flown by and we're on our 3rd stimulus package. But here we are. Let's hope that there isn't a need for any more after this. My brain can't take it anymore. I'm sure Melody's can't either. But we'll work with what we have for now. So we're going to start off with PPP. If you've attended any of our webinars before, you'll know that I and Melody have talked a lot about PPP. So we're going to start there. So I wanted to first mention that there is right now, the deadline to apply for a PPP loan is March 31st, which is obviously in about a week's time. Many banks are currently not even accepting any new loan applications because they need time to process the ones that are already sitting in their processing queue. However, there is a bill that has already passed through the House. I believe it was 412 to 3. So a lot of bipartisan support to extend the time to apply for a loan out to May 31st. It's currently with the Senate, and again, has a lot of bipartisan support and is expected to pass, I believe, sometime this week. So essentially what that does is it opens up the PPP loan application for another 2 months. What it also will do is give the SBA an additional 30 days after May 31st to process any loans submitted by May 31st. What that means is it should allow for banks to actually keep the loan application portals open through the end of May, which is great news. Right now, there's some confusion because some banks are no longer accepting loan applications. Some are. It's hard to tell who's doing what, but this should help significantly for those that maybe were not as quick to apply or have been having a lot of issues with the application process. This extension of the time to apply should help with that. This also, we don't have confirmation on this yet, but this may also allow those that got a first draw PPP loan this year the ability to apply for a second draw loan. Basically, to be able to be eligible for a second draw loan, you have to be able to certify that you have used or will use all of your first draw funds prior to receiving a second draw loan. With the application deadline at March 31st, applying for a second draw loan when you just got a first draw loan this year was going to be quite difficult. But now that they are opening it up, there's quite a substantial amount of funds left in the program. This may allow those that got a first draw this year to also get a second draw this year. So keep an eye out for that. The American Rescue Plan Act also expanded eligibility for not-for-profits. So now it includes all not-for-profits listed in Section 501C of the Internal Revenue Code. Basically, what this means is organizations like C4s, C5s, C7s are technically eligible to apply for a PPP loan. However, all organizations, even those that were eligible before, are still subject to lobbying activity thresholds. So you can't receive more than 15% of receipts from lobbying activities. Lobbying activities can't comprise more than 15% of your total activities or expenses. And you can't have spent more than $1 million in lobbying activities during the most recent tax year that ended prior to February 15th of last year. So those lobbying thresholds were in place before this expanded eligibility took effect, but just want to reiterate that the PPP loan is now open to all 501c organizations. However, you have to meet those, you can't exceed those lobbying thresholds. Internet-only news publishers were not eligible before. Now they are eligible, so that's new. So if that applies to you or a related organization, you can apply. There is also an updated loan calculation for Schedule C filers. This has made quite a bit of news. If you've been paying close attention to the news, this was towards the beginning of March that they changed the loan calculation for Schedule C filers. It's additionally caused quite a bit of confusion. Again, that May 31st extension is going to be really helpful, especially for Schedule C filers who can now use the new loan calculation. I have heard there are some banks that weren't even accepting the new calculation. So if you are a Schedule C filer and you're looking to apply for this increased amount of PPP loan, be patient, hold off a little bit longer. If you can, wait for hopefully the Senate to pass the extension of the PPP loan application deadline, and then banks should be able to update their systems and you'll be able to apply for that updated amount. Because this was such a large change, I wanted to make sure that we talked about this a little bit. This also applies to Schedule F filers. The change for Schedule F filers actually came with the Economic Aid Act back in December. So this change has been in place for Schedule F filers since the beginning of the year. It's new for Schedule C filers as of the beginning of, around the beginning of March. Essentially what Schedule C filers are now able to do, which again, Schedule F filers were able to do at the start of the PPP2 loan period, you're able to use gross income instead of net income. Prior to this change, Schedule C filers that had no or negative or a net loss in 2019 or 2020 were essentially not eligible for a PPP loan unless they had payroll costs, so unless they had employees. So basically, if you did not operate at a net profit, which for many Schedule C filers, operating at a profit is not something that happens many years. You're operating on very small margins. There was essentially no opportunity for you to receive funding to even help cover your normal operating expenses or provide you with any owner compensation replacement. So this new update changes that. So I've got two descriptions here. How to calculate the loan for a Schedule C filers. So if you are a Schedule C and you have no employees, you can use your 2019 or your 2020 gross income, which is line 7 of your Schedule C. You're still subject to a cap of $100,000. You then divide it by 12 and multiply by 2.5, essentially meaning that your maximum loan that you can get if you are a Schedule C filer with no employees is $20,833. You can use that money to cover any eligible expenses. So those are payroll and non-payroll eligible expenses, including proprietor expense, which is the owner compensation replacement. So you can make that payment to yourself, and that will be a qualified expense. If you're a Schedule C with employees, you're going to use that same eligible payroll cost calculation for your employees. So their gross salary, any employer contributions to health insurance and 401k, state and local tax. And then you can also calculate an amount for owner compensation replacement. So you can use your 2019 or 2020 gross income, whichever year of payroll costs you're using. You can't separate the two. You have to use all 2019 or all 2020. And then you would subtract those wage and employer costs that you've already accounted for in your payroll costs. And that's how you're going to get your maximum loan amount for Schedule C. So that was a pretty big update that came out a few weeks ago. Again, if you're working with a banker and they are not accepting the new Schedule C calculation, be patient. It could mean a substantial change in the amount of your loan. And you want to make sure, especially if you're in need of the funds, that you're maximizing these benefits. So if you can, be patient, and they should be updating their portals so that they can accept this new calculation. So a couple of reminders before we move on to the next program. I've had a couple of internal conversations, and so I figured people may not be thinking about this. PPP loan forgiveness, important reminders. Loan forgiveness applications are due 10 months from the end of your covered period. If you received a loan in early April 2020, so if you were one of the first people to apply and receive a PPP loan last year, and you are really dead set on using an 8-week covered period, the due date for your loan forgiveness application could be as early as the end of this month, like within the next week or so. So it's really important that you're calculating what 10 months after the end of your chosen covered period is, and making sure that you're in compliance. If you do not apply for loan forgiveness within 10 months from the end of your covered period, you will not be able to have the loan forgiven. So basically it just becomes a loan, and the bank will send you notification for when you have to start making payments. So do not miss that due date. If you have questions about that and you're working with an accountant, make sure you ask those questions, make sure that you're getting the information you need, be in contact with your lender, because that is a really, really important due date. Otherwise, excuse me, you can extend your covered period. If you choose a 10-week or a 16-week or a 24-week covered period, obviously that pushes the due date out with each additional week that you add to your covered period. So there are some options there, But if you are really set on an 8-week covered period and you got that loan first thing last year, make sure that you have your loan forgiveness application in right away, ASAP. All right. So next big topic. Melody, are there any PPP questions before I move on?
Sorry, I was on mute. Just one in regards to, can you apply for PPP if you got an EIDL loan?
Absolutely, yes. So the EIDL loan, and even if you got the advance or the EIDL loan and the PPP are not mutually exclusive. And the Economic Aid Act back in December eliminated the need to reduce the amount of PPP loan forgiveness by the EIDL grant you received. So basically the two are kind of separate things. You can apply for both, you can have both. You probably shouldn't use the funds to cover the same things. So if you're using PPP money to cover wage costs, you shouldn't be using the EIDL to cover those same wage costs. But realistically, the EIDL loan, there is really no tracking. It could be audited in the future, but there isn't anything that you have to submit at any point in time. So they are not mutually exclusive. You can get both at the same time.
Another one came in while you were talking on the Schedule C filers. Can
Sure.
you have a choice to use the old loan calculation method if their 2019, 2020 net income is higher than 100,000?
Absolutely, yes. So you do not have to use gross income. If you had a healthy net profit and it's over 100,000, by all means, you can use your net profit. Either way, you're going to be limited to that 100,000. So yes, you can use net income or gross income. Yep.
We're good. Thank you.
Thanks, Melody. All right, so another hot topic has been the employee retention credit. I'm going to talk a little bit about how it applies to 2020, since that's really been what's on most people's minds right now. But I'm also going to talk about the importance of the credit for 2021. So the employee retention credit back in the Economic Aid Act, so that was the bill signed into law in December. What ended up happening with the Economic Aid Act was that they made the employee retention credit available to PPP loan recipients. Prior to December 27th, the employee retention credit and PPP were mutually exclusive. So you could not take the credit if you had received PPP loan proceeds. This change caused quite a bit of good disruption, I would say, but disruption nonetheless, because essentially there are a lot of moving pieces that have to be analyzed to determine, number one, looking back to see if you were eligible for the credit, if you had received a PPP loan, and number two, figuring out how to apply the credit. If you, number one, have already applied for and received PPP loan forgiveness, or number two, if you haven't started that process yet and need to start thinking about it. So for the employee retention credit, if you aren't familiar with it or didn't know that you're eligible, there are a few ways to be eligible in 2021. You can, if your operations were fully or partially suspended due to a government order, so you have to be able to reference a specific government order. For example, if here I'm in Madison, Wisconsin, in the county of Dane. So if Dane County issued an order that all restaurants had to be closed from March 31st to April 30th, that would be the order that I need to reference to say that I'm eligible for the credit from March 31st to April 30th. The second way to be eligible for the employee retention credit is if you saw a reduction in gross receipts of 50% or more in a calendar quarter in 2020 compared to that same quarter in 2019. Again, I'm not going to go into examples of the employee retention credit. We have done, Dan Bergs, another staff member here at Wegner, did a great webinar a few months ago. I highly recommend going back to our webpage and revisiting that webinar. If you didn't have a chance to attend, all the information he presented is still relevant. We've also written quite a few blogs over the last few months, so definitely visit our COVID-19 Resource Center for more details. But I wanted to give some high level information for anybody that's still kind of trying to figure it out. So you can apply for the employee retention credit in 2020 on your fourth quarter 2020 in an amended version. So the quarterly 941s are due at the end of the month following the quarter end. So the fourth quarter 2020 941 was due January 31st. So everybody should have filed their fourth quarter 2020 941 now. So at this point, if you want to apply for the credit, you'll need to file a form 941X, which is an amended 941. If you are eligible for the credit in more than just the fourth quarter of 2020, you are still able to only do an amended fourth quarter and account for all of the quarters that you are eligible for the credit. So you don't need to amend every single quarter's return based on when you're eligible. You can just do an amended fourth quarter. The important piece to know is that you cannot double dip. So double dipping is a huge, huge thing to be thinking about with all of these different government programs, the lending, the grants, and the credits. Double dipping is a no-no. Essentially, you shouldn't be getting double the benefit if you're applying for these credits and these loan programs and the grant programs. So any wages used for PPP forgiveness cannot be used to claim the employee retention credit. So it works out kind of funny for some. And I wanted to make sure that we kind of have an idea of if you've applied for PPP 1 forgiveness. So let's say you have already applied and maybe you've received forgiveness, but you also determined that you were eligible for the employee retention credit. There's nothing you can do about your PPP 1 forgiveness application. If it's been submitted, accepted, and forgiveness has been received, you can't do anything to pull that the forgiveness application or make any changes. But what is important to note, and what many borrowers have done, is on their PPP loan forgiveness application, the payroll costs on the application itself typically tend to exceed the PPP loan amount. Let's say you picked a 24-week covered period, you had a $100,000 PPP loan, but in 24 weeks, your payroll costs were $200,000. Essentially, that $100,000 in excess of payroll costs, you can use towards the employee retention credit. The $100,000 of your PPP loan, those are tagged for PPP and you can't use those again. But any payroll costs in excess of your total PPP loan are eligible for the employee retention credit. So if the payroll costs on your loan forgiveness application are equal to your PPP loan amount. So if let's say you picked a 15-week covered period for PPP, you had $100,000 in payroll costs and you put $100,000 on your PPP loan forgiveness application, and that your loan amount was also $100,000. Those $100,000 are earmarked for PPP and you cannot use those wages for ERC. So just think about the fact if you did put excess wages on your PPP loan forgiveness application, that's okay. Those excess wages are going to be eligible for the credit. So that's important to note. So there is some analysis that needs to be done. And it isn't just, for many, it's not just an easy calculation, but I just wanted to make sure that we highlighted a couple of important pieces related to 2020. For 2021, some of the changes from the American Rescue Plan Act, as I mentioned before, the credit is now extended through the end of the year. The credit is quite a bit more advantageous this year than it was last year. For 2020, the maximum credit was 50% of up to $10,000 in wages per employee per year. This year, the credit is maxed out on a per quarter basis. So essentially you have the possibility of getting a much larger credit each quarter by employee. So it's a much more advantageous credit. more people will be able to apply for it. Again, the eligibility requirements are the full or partial suspension of operations, or excuse me, a decline in gross receipts of 20% or more in a calendar quarter in 2021 compared to the same calendar quarter in 2019. So you're looking back to kind of the last normal year of business operations. So that declining gross receipts of 20% or more is far more beneficial to more organizations. The credit last year, you had to show a decline in gross receipts of 50% or more in any calendar quarter. So a lot more people are going to be eligible for the employee retention credit in 2021. So again, you would apply for this credit on your quarterly 941 form. My recommendation is that you start getting prepared to provide this information to your payroll provider immediately, right after March 31st, so that they have that information. You can request a refund of the credit, which means the IRS is going to send you a check when processed. You can also fill out a Form 7200 to get an advance on the credit, which should maybe allow you to get a check a little bit faster. However, my recommendation is that you're thinking about, are you eligible in this first quarter of 2021, which the first quarter ends next week? If you are eligible and you've been making regular 941 payments as you normally would, what you can do is when you apply for the credit on your first quarter 941, you can have the credit offset your next quarter's payments by checking the box to apply that credit to your next return. Essentially what that means is you are going to be able to reduce the deposits that you have to make in the next quarter to the extent that you have a credit received. Because these credits can be so substantial, it may mean that you don't have to make any 941 payments in the next quarter, which means that you're going to have immediate cash in the bank. So for those that are cash strapped, have immediate cash needs, the issue with the filing the amended Form 941 or requesting a refund of the credit is that the IRS is already incredibly backed up. It's my personal opinion that if you apply for this credit, you're not going to see a check from the IRS for months. I would say maybe 6 to 10 months. I mean, the IRS is in a tough spot. They're understaffed, just as many other places are. They have to implement all of these new rules and programs. So expecting a check from the IRS any sooner than that is unlikely. But what you can see is an immediate benefit by making sure that you're ready to apply for this credit on the next quarterly 941, which is quarter one, and applying that credit to your next return to offset payments. We are still waiting on some additional guidance for the application of the 2021 credit. The anticipation is that many of the details will be similar to the 2020 rules, with the exception of the eligibility requirement and the amount of the credit. Those are some of the key differences, but a lot of the other rules are going to still apply. The intermingling with the PPP is the same as it is for 2020. You cannot use the same wages. So if you did get a PPP loan and you're using those funds now, you do have to apply that same thought process. However, many people may not have gotten a PPP loan until mid-February. Maybe you didn't get it until March. So you may have additional, maybe the first month and a half of this year, you'll have employee retention credit eligible wages if you meet one of the eligibility requirements. Excuse me. So this is pretty big. You know, I have been working to stress the importance of determining whether you're eligible this year, because again, you're going to see that immediate cash in the bank if you timely file your quarterly 941 for first quarter and have those payments applied to the next return. Be in touch with your payroll provider. They're, you know, working to be up to date with all of this guidance as well, but just make sure you're keeping a connection with them because they are the ones responsible for filing your quarterly 941. And so you want to make sure that they know what you want to do and they have the information they need to file it correctly.
Kate, we have a number of questions on ERC. Is now a good time for me to go ahead and ask you a couple?
Absolutely.
One came in that their payroll company actually has a setting that is taking ERC credit at the time of payroll processing, lowering their liability in real time. Thoughts or risks regarding that?
Many payroll companies are doing different things. I think if they have a report that you can review and be looking at, the important thing, one item that I have heard that's going to cause, I think, maybe a little bit of a discrepancy in applying for this credit is the way that some payroll systems are set up to just essentially ping or tag every dollar, and then they're going to look at what your PPP covered period is and just eliminate the wages that are included in your PPP covered period. However, you actually do have the ability to manage some of that, how you're applying the wages to PPP versus ERC. So if you have questions, try to have a conversation with your payroll provider about how they're doing. If you work with an accountant, it's probably good to have them in on the conversation too, just because you're going to be able to talk through the analysis of the interplay between these programs, because there is a lot more that you can do versus just tagging every dollar with the ERC credit and then eliminating the covered period for PPP. So based on that question, probably would need to know a little bit more information. But I think it's really important to be asking your payroll provider for reports so that you can look at them, make sure that they're reasonable. The last thing you want to do is miss out on potential dollars from the credit, which we have seen happen a few times when we review some of the information that the payroll providers, and sometimes it's just an issue regarding system limitations. There's just only so much that payroll systems can do, especially having to update as quickly as this information is coming out. So just be requesting reports, look over them. And if you work with an accountant, have them look over it too, because it'll be worth it. These are big dollars that we're talking about.
We had several people ask, what's the extension deadline to file the amended 941 for the fourth quarter of 2020?
So technically, there is not a deadline to file an amended 941. The rules for filing amended 941s are that you should file it as soon as you know that there is a reason to be filing it. So that's fairly open to interpretation. I can tell you from Wagner's perspective, we are assisting clients with this process. We know that the payroll companies are backed up. They're struggling to manage with all of this new information, updating systems. So we are able to assist clients. Obviously, we're right in the middle of tax season. Things couldn't be crazier. So we are planning to assist clients with this process. However, it will likely be after either April 15th or May 17th. The deadlines are a shifting target as well. But if you work with an accountant, be talking with them, see if they're open to helping you with it too. I know that payroll processors are struggling with the new guidance, just as we are, to keep everything up to date. So technically there is not a deadline to file, but the rules are that you should file it as soon as you know that there's a reason to have to file one.
How about clergy wages? Are those included in ERC?
I think so, but that's probably a good question to make sure stays in the Q&A, and we can make sure to get an answer after the program. I'm not as familiar with the religious niche, as I know we have some people on our staff that are.
And what about C Corp owners and spouses? Are they eligible for ERC?
So owners are not eligible for the credit. So owners, C Corps, S Corps, the owner wages are not eligible for ERC. So that's another reason why additional analysis sometimes needs to be done between PPP and ERC, because you can use owner employees' wages to apply for forgiveness under PPP, but they are not eligible wages for the employee retention credit.
And one last one, clarification, PPP loan forgiveness is not impacting ERC wages, correct?
Loan forgiveness is not. Nope. So if for some reason you aren't able to get full forgiveness on your PPP loan, That does not mean that you'll have any sort of reduction in your employee retention credit. You still have to apply the same thought process that you can't use the same wages for both, but the amount of forgiveness does not impact your credit, no.
That's the bulk of questions. And I know you got lots to cover, so thanks.
All right, sounds good. All right, I know that this one is a huge topic. I know we had a lot of questions beforehand too. Just make sure you put your questions in the Q&A and watch out for additional webinars where hopefully we'll be able to get a few more shorter webinars out to cover some more of these questions I know everybody has. But I want to make sure we get through everything else. So a little bit about Ffcra credits. For anybody any employers that have been implementing the Ffcra credit program, there were some sick leave related to COVID, and then also expanded family and medical leave related to COVID. There were certain reasons that an employer could receive credits to pay employees if they had the sick leave or the expanded family and medical leave. So employers can now voluntarily choose to grant these Ffcra paid leave through September 30th of this year. So they extended it. Again, I believe it may have been originally set to expire at the end of March or June. So it's now extended to September 30th. It is voluntary for employers to opt into this program. However, it is beneficial for employers because there is a credit. It's another credit that you get through the filing your 941. So you just need to make sure that 941 is filed correctly. And if you use a payroll provider, that they know that you're paying Ffcra wages and they have a separate code where they're tracking that. They also expanded the qualifying reasons for Ffcra leave. It now includes employees that are seeking or awaiting results of a COVID test, employees that are obtaining a COVID vaccine, or employees that are recovering from an illness or condition or reaction related to the COVID vaccine. So those are new qualifying reasons for Ffcra leave. They've also expanded the amount of days that an employee can take Ffcra sick leave. So any employee that exhausted the 10 days of Ffcra sick leave prior to April 1st of this year are now eligible for up to an additional 10 days. And starting April 1st of this year, the expanded family and medical leave under Ffcra can now be taken for all reasons that an employee can take Ffcra paid sick leave. So it was a stricter amount of reasons that you could take that expanded family and medical leave. So they've opened that up quite a bit. And just a note, because again, all of these programs have things that work together and things you have to be thinking about. So I just made sure to put a note that wages paid under Ffcra are not eligible payroll costs for PPP. So again, it's important to make sure that you are tracking any wages paid under Ffcra with a separate pay code. So if you do your own payroll in-house, you should have set up a separate pay code to track those wages so that you could break them out, because you can't use those wages towards PPP forgiveness. In addition, you can't use those same wages for the employee retention credit. If you're looking at a Form 941, you'll see that there are two credits to calculate. One is the Ffcra, one is ERC. So you can't use those Ffcra wages for the ERC credit. So a lot of things to be thinking about. All right. So targeted idle advances. These, if you recall correctly from last year, the EIDL program is the Economic Injury Disaster Loan. It's a program that existed before the pandemic. It's an SBA-backed program that provides funding to businesses and organizations that are impacted in a federally declared disaster area. Last year with the pandemic, federally disaster declared area was declared for the entire country, which made this program open to any and all businesses. As part of the EIDL loan program, they also, the CARES Act initially funded an EIDL advance grant program, which allowed for those applying for a loan to also apply for a grant of $1,000 per employee up to a grand total of $10,000. That money was exhausted fairly quickly. It was exhausted by the middle of the summer last year. So those EIDL advances have not been available up until about February of this year. However, the Economic Aid Act and now the American Rescue Plan Act, which added some more money to this program, is not an open application process. So if you missed out on the program last year or are thinking that you want to try to apply for these funds this year, it isn't going to work the same as it did last year. There is no open application process. This is targeted. So the SBA will be contacting eligible participants and providing application instructions to those targeted applicants. They started this process in early February. So some of you on the call may have already received an email. Don't ignore those. It means that you are potentially eligible for additional funding. This is a grant, it's not a loan. So it is not money that you have to pay back. It is technically, I say tax-free. That I hate to ever just say tax-free because nothing's ever free. But it is federally tax-free money, and you are able to deduct the expenses for for what you use the funds for. But for states, it may be different. So that's why I'm always hesitant to say it's tax-free. But like I said, the SBA began this process in early February of sending emails to these targeted recipients. The first priority group included 2020 EIDL advance recipients that received less than $10,000. So essentially that means if you are a small employer, you had 5 employees at the time of your EIDL advance and loan application, and you got $5,000 last year, they're going to reach out to you and you would be eligible for an additional $5,000, basically to get you up to that maximum of $10,000. The second priority group includes organizations that applied for the EIDL assistance last year before the Economic Aid Act, December 27th, but didn't receive funds because, like I mentioned, the funding ran out about midsummer last year. So they will be reaching out to those that had submitted an application but didn't get funds because there weren't any funds available. Again, this is targeted. So you'll receive an email from the SBA letting you know that you may be eligible and giving you instructions on how to apply. The eligibility requirements for this targeted program is that you have 300 or fewer employees. You are located in a federally identified low-income community, which if you go to the SBA website, sba.gov, and you scroll to the targeted EIDL advance splash page, they have an interactive map, and you can determine if you are located in a federally identified low-income community. So if you do think you're eligible and you want to make sure that you are, you can go to their webpage and use that interactive map. And you also have to demonstrate a reduction in revenue of more than 30% during an 8-week period beginning on March 2nd of last year or later. So there are still, just because the SBA reaches out to you doesn't automatically mean you'll be eligible for this additional funding. You do need to meet these eligibility requirements. Things to have in place, the documents that you'll need. Make sure you filed your 2019 tax return. Those were due last year, so hopefully you've all filed those. And then you'll also need proof of your monthly gross receipts for each month, starting in January of 2019 through the most recent month-to-date period. They'll use that information to prove the reduction in revenue during an 8-week period. So that's the information that you'll need if you do receive an email for the targeted EIDL advance. There was also additional funding. So the American Rescue Plan Act provided even more funding for this targeted EIDL advance program. And the additional funds, the additional funding for the program will allow for $5,000 supplemental grants to organizations who suffered a revenue loss of at least 50% and have 10 or fewer employees. So you have to meet both of those criteria to be eligible for the supplemental grant. There isn't, this piece of it has not started yet. So the suffered a revenue loss of at least 50%. We don't have information on what time period that comparison is covering. It's likely going to be related to the information that you would be submitting in the initial targeted grant program. But having 10 or fewer employees is another piece of the puzzle. So you have to meet both of those requirements. So more information to come on this, keep an eye out. Certainly if hopefully you're subscribed to our email lists, and we'll get information out as soon as more becomes available. Questions, Melody, on EIDL at all?
Not that I saw, so keep going.
Perfect. All right. Shuttered venue operator grants. This has been a program in the works since the Economic Aid Act. In the Economic Aid Act, they allocated about $15 billion to this program, and the American Rescue Plan Act allocated another $1.5 or $1.25 billion. So we're a little over $16 billion, which honestly sounds like a whole lot of money. Sounds like a whole lot of money to me. But when you think about the Shuttered Venue Operator Grant Program and who they're targeting, think music venues, movie theaters, that is a large group of organizations. $16 billion, I think is going to go pretty quickly. This is it's going to be a pretty active program, and we finally have a launch date. That date is April 8th. If you are not actively subscribed to email lists on the SBA.gov website, I highly, highly recommend after this webinar, go to the SBA.gov website, browse around, make sure you're signed up for email notifications so that you have information as soon as it's available. I know I believe it's next Tuesday, there is, I think it's about an hour-and-a-half webinar that the SBA will be putting on to talk more about the Shuttered Venue Operator Grant Program and rollout. So if you do believe that you're going to be eligible for this grant, please make sure you sign up for that. One of the big issues that initially came out with the Economic Aid Act was the idea that anybody that was going to apply for a Shuttered Venue Operator Grant could not also take out a PPP loan. That was, again, causing a lot of confusion, a lot of stress for those that weren't really sure if they would be able to apply for the grant, while also trying to manage the March 31st deadline to apply for a PPP loan. Well, luckily, the American Rescue Plan Act addressed that. It did reiterate that PPP loans received in 2020 have no impact on the SVOG program. So that we knew that at the Economic Aid Act, but it has been reiterated. If you received a PPP loan last year and this year you're eligible for SVOG, there is no impact. That's totally fine. You can get both. If you have received a PPP loan this year, that's okay. The PPP loan will be subtracted from the SVOG that you're eligible to receive. So I just put a little note on here. Let's say you received a PPP loan of $100,000 today. And your maximum, when the portal opens for the SVOG, your maximum SVOG is $450,000. You'll subtract the PPP loan amount you received, and you'll be eligible for a $350,000 SVOG. So they've made it pretty easy to do the math there. However, if you have been approved for SVOG, so let's say the portal opens April 8th, you get approved April 15th, and you're going to receive some amount of money for the Shuttered Venue Operator Grant Program, that means you are no longer eligible to apply for a PPP loan. So if you are in desperate need of funds, you're eligible for PPP and you think you're going to be eligible for SVOG, I highly recommend getting an application in for PPP right away. Again, my opinion is that the SVOG funds are going to go pretty quickly. So I would recommend, if you want to get in on both, make sure that you apply for PPP now if you need the money. Otherwise, you'll be able to get the maximum Shuttered Venue Operator Grant. Again, I'm going to point you to the SBA.gov website. It's a great website. I have the page up. I'm not even joking. Literally every day, I just have the SBA.gov website up. It gives me 98% of the answers to my questions that I have about most of these programs, but they did issue 2 weeks ago, and they've been updating it, a set of frequently asked questions, as well as an eligibility requirements checklist, a grid, easy to follow grid, and a preliminary application checklist. I would definitely review this. There's a lot of information on that preliminary application checklist. There's going to be a lot of information you need to have ready to go. So make sure you're looking at that. We did write a few blogs in the last week or two as well, outlining this information. So if you want a summary first, please visit our blogs, our COVID-19 Resource Center, and they'll link you to these documents as well. So just to go over some highlights, you are eligible for a grant. Again, this is a grant. This is not a loan. So there will not be any requirement to pay the money back unless you aren't able to use it all. So the grants are equal to 45% of your 2019 gross earned revenue. So this could mean big dollars. The maximum single grant award is $10 million. $2 billion in the funding is reserved for eligible participants with up to 50 full-time employees. So again, those smaller, potentially harder hit organizations, there is a pot of money set aside specifically for them. A very, very important piece. This is a federal grant award. So you have to register for a DUNS number, DUNS, at sam.gov. Again, I'm going to reference you back to the SBA's website. They have a video tutorial on how to go through the sam.gov process, but that getting a DUNS number can take up to 2 weeks. So if you haven't done that, do that today. Literally clear a space off your calendar and register for a DUNS number today, because it can take up to 2 weeks to get that number, and you're going to need it to be able to apply for this grant. Another very important thing to keep in mind is that the Shuttered Venue Operator Grant and potentially the Restaurant Revitalization Fund will be subject to single audit requirements. If you already have a single audit, that's great. If you have no idea what I'm talking about, pay attention. It does mean that your organization, which may have never been subject to an audit in the past, now becomes subject to an audit, and not just a normal audit, but a single audit. And what that means is that you have expended more than $750,000 in federal funding in one fiscal year, which for some organizations who, sold tickets and they basically were shut down last year, and they get an award, let's say for $1 million, you are now subject to a single audit. So you're going to need to factor that into your budget to make sure that you are working with an accounting firm that can do an audit for you. So that's an important piece of the puzzle. The grant can be used for most ordinary and necessary operating expenses. So not a lot of limitations. There are some, but not many. Recipients will have 1 year from the date their award is dispersed to use the funds. And like I said before, any unused funds after that 1 year period have to be returned. So there will be tracking required. You will likely have to submit reports on how you use the funds. So this is not as simple as you got a grant and you just get to use it. There will be tracking. There will be reporting necessary. So make sure you have a good understanding of what the requirements are. There are some priority periods for who will be eligible for these funds. The first priority, I believe, is maybe the first 2 weeks of the portal being open will be for entities that suffered a 90% or greater revenue loss. The second priority will be for organizations that suffered a 70% or greater revenue loss. And I believe that would be the third and fourth week of the program. And then after that, it opens up for entities that suffered a 25% or greater revenue loss between one quarter of 19 and the corresponding quarter in 2020. You'll notice that those first two priority periods have a different time period of revenue loss that you're looking at. So make sure you understand those differences as well. If there's funds left available after those first three priorities, there will be the opportunity to receive supplemental funding. So any recipients that received prior funding who suffered a 70% or greater revenue loss for the most recent calendar quarter as of April 2021 or later will be eligible for additional funding. And then you'll have additional time to use that additional funding. So a lot of things to think about. And I know we're getting close on time, so I just want to make sure that we hit the Restaurant Revitalization Fund. There's, you'll see on the bottom of the screen, I have more info to come. There's limited information about it right now. This is another program like the Shuttered Venue Operator Grant that will be managed through the SBA. So right now they're working on the Targeted Idle Advances, the Shuttered Venue Operator Grant. We anticipate the Restaurant Revitalization Fund probably will roll out, I would say, in the next maybe 6 to 8 weeks. So it's going to be a little while, and we're going to continue. We're awaiting more guidance. However, I've provided you with the information that we do have to date. Again, this is a grant, so no repayment unless all the funds are not used in the covered period, or if the business permanently ceases operations. Any funds not used by the time you close shop, you would need to return those. The grant calculation is anticipated to be 2019 revenue minus your 2020 revenue minus any PPP loans received. So you can kind of do a quick calculation of what this grant might look like if you fall into one of the eligible categories, which is pretty open-ended. Anybody that has any sort of food service may fall into this category. Bars, restaurants. It's a $10 million max grant per entity with a $5 million per physical location cap. Right now, the covered period to be able to use these funds is retroactive back to February 15th of last year, and then can be used for expenses through the end of this year. Again, can be used to cover most operating expenses, so it's not as strict as the PPP program. You are not eligible if you have more than 20 restaurant locations, and you're ineligible if you receive or intend to receive a Shuttered Venue Operator Grant, and there may be some duplicate eligibility there. $5 billion of the 28.6 is reserved specifically for businesses with less than $500,000 of 2019 revenue. So those smaller restaurants have a bucket of money reserved for them. And the information that we have now states that there will be a 3-week priority period when the program opens for women, veteran, and minority-owned businesses. So a lot more info to come on the Restaurant Revitalization Fund, but kind of gives you a good idea of if you fall into that category, what type of grant dollars you may expect to receive. And with that, links to resources. Our COVID-19 Resource Center, we work to update that as quickly as we can. The SBA.gov website, again, I'm on that website every single day. They've got links to the FAQs, they've got links to the applications, checklists. Keep an eye on that page, sign up for our email list and theirs, so you can make sure to get the most up-to-date information. Melody, I know we're right at time here. Is there anything vital that I can
answer? Just a couple maybe quick ones you could do on the Restaurant Revitalization, because they seem relatively quick. Is the NICS code going to be used for that, or do they have to file for a DUNS number for the Restaurant Revitalization?
So that's a great question. I would say the likelihood is to be on the safe side and register for the DUNS number. We don't have confirmation yet if that will be required. However, it is similar to the Shuttered Venue Operator Grant Program, where it is a federal award, grant award, and typically you would need a DUNS number for it. So I would be proactive about it and go ahead and register. Yep.
Thanks. I know we're out of time, so thank you for all your answers in between and for all your commitment to keeping up to date on all of this.
Absolutely. Thanks, Melody.
Yes, and thank you everybody who attended today. You will receive the PowerPoint and the recording from today. So make sure to stay tuned for our upcoming webinars. Thank you, Melody and Kate, for all of your expertise and information. We really appreciate it. Have a great day, everybody. Thanks.
Bye.